Welcome to Trading Lounge and the US indices, and today we'll look at the S&P 500, the Dow Jones and the Nasdaq. And we'd been looking at a bearish count, as you know, but yesterday we looked at a bullish count, and that bullish count is still valid pretty much while on the S&P 500 here, the 1900 here stays in place, as that is the 50-60% retracement level here. So we still need to bear this particular count in mind. Okay, so with that sort of said and done, we can go back to our bearish count, which is, and I'll go on to a 1 hour chart, so there's not much a huge difference. So on the original bearish count, we were looking at this as being wave 4 here. It's just that it's pulled up quite high, but you know, when I flicking through, you know, quite a few hundred stocks in the US each day, you kind of see that stocks are trying to move up, but they're moving up on lower volume and they're sort of struggling. So yeah, so anyway, so this count is the sort of primary count. Now obviously the market's trying to get towards this particular number here, this major level, which has done that. It's run out of steam and is rolling over now. I mean, this count down here can be counted as an ABC correction as well, so we need to be a bit mindful of that. So this particular number here as the resistance would be, you know, is part of confirming this particular move down. And in terms of counting it down, we can expect to bounce off the 1900 here from wave 4 down to wave 5. And if that's, I mean, this, like I mentioned, this can be counted as a corrective pattern as well. That would finish on the 1900 here. Okay, so as an ABC down to this point here. So this particular move here, back into between 1950 and 1960 sort of area here. If we can acknowledge this or work out this as a corrective pattern, then we'll see wave 3 down, wave 4 and wave 5 down. Yeah, so that's pretty much the bias count. You know, even if we don't get this full bounce off here, it might only come back up to the wave 4 of one lesser degree as well. So we should be mindful of that. But pretty much anywhere in, let's just, so the top of this one would have some relevance and the top of this one would have some relevance. So it may only come into this sort of space here before it rolls over again. But if you're looking to short and you're not already short, well, then you would have to wait for this particular bounce here. And of course, this pattern is the same for the Dow Jones as well. Just on the 1 hour chart, so it keeps it in sync. And in this particular case here, we're looking at support at 16,000 here, and then the corrective bounce, and then we'll be looking down at, well, roughly this particular figure here, but below this wave 3 here. And this would kind of suit the you know, the Australian market too, and I'm looking at, you know, like AMP that's got further to go down, and the finance sector as well. So yeah, it's kind of the sort of preferred count as such. So yeah, would only turn bullish if we see 5 waves come off this low here back up, you know, into this sort of area through here, or we found the 16,500 as a bullish as support, and then we'll turn bullish on that market here. This particular countdown through here, just if I can just flip to the 5-minute chart here. This counts quite nicely down here as third wave, as wave 1 and 2 here, and then 1 and 2 and 3 down here with 5 waves. It's quite a nice structure actually. Then 4, then 1 and 2 and 3 and 4 and 5 here. So a very nice third wave here. Doesn't really get much better than that. And of course the fourth wave here and the fourth wave may not be finished. It may get a bit more complicated here, and then down for the fifth wave here. I've labelled wave 1 here, and you can see that it's really quite sort of messy and doesn't fit very well at all. In fact, this would be much better suited here as an A wave here, B wave here, and C wave here. Yeah, on the cash market, it looks a little bit better than this, but at the same time, the 1, the 2, the 3, 4, and the 5 coming down through to here. You could probably even squeeze the fifth wave to this point, wave 1 to here. Not that it matters too much. It still leaves this as wave 2 here. Yeah, anyway, that's that. And of course, the Nasdaq is much the same as well here, just on the 15-minute chart here. So basically failing to it got up onto group 1, which is number 3 here for 4,300, but it never gave us a signal to the upside. So first of all, we would use the first high here as a signal, second high here, and third high here. Even if one of these got triggered and the market came back below the level here, then you need to get out. Okay, I just thought I'd pop that in there, but that's the sort of simple strategy for that. But as this stands here, you know, from wave 4, wave 5 would suit better at 4,100 here. But if it gets pulled to this number in some sort of extension down here, then you need to look at the rally at different heights here. So if it bounces off this 2-1, roughly back 50-60% to this area here, if it moves down here, then a bit low as a retest of the 4-2 there perhaps. But the main point is that you're looking for a 3-wave price action in here for further downside there. All right, well, pretty short and sweet. And you know, the S&P 500 at the 1900 as the resistance is a catalyst, the confirmation for further downside, or not.